Hey there guys, and welcome back to Alex Invests. For those of you who don't know, I'm Alex. I'm a business owner with a degree in economics, and I've been investing since I was 18 years old. As we can see, the markets are pretty green today, but there's a few stocks that are a little red today, and one of those is Very Good Food Company, down 12% earlier, and I ended up actually picking up quite a few more shares of this company while it was down 10%, because I do see a recovery coming there pretty fast. The other two stocks are XRO and FCell. Originally, I wanted to talk about FCell today, but there's too much going on in XRO Technologies. They had their Q3 financial 2020 results come out yesterday, so I had to talk about that today. I did end up picking up more shares of both FCell and XRO this morning as well. All right, so first we're going to look at some of XRO's partners and where they're headed for revenue. Then we're obviously going to look at the Q3 financial report and finish off with a bit of chart information. But before we get into that, as always, please like and subscribe to the video, guys. It really does help out the channel and it helps me create more content for you guys. So before we get into the Q3 financial results, I just wanted to talk to you guys a bit about where the company is right now, because I got quite a few questions about their revenue. And yes, currently they have no revenue, but they are in the works with quite a lot of companies to start generating that revenue and start generating that income moving forward. The first one is Heinzmann. On the 24th of September, they announced a collaboration agreement with this motor company to integrate their coil drive technology, which we know their 100 volt coil drive technology is now ready for vehicles, and they want to integrate this coil drive technology into Heinzmann's motor designs, and that's going to increase speed, it's going to increase torque, and it's going to increase range of these motors as they get going here, and as they start selling their 100V coil drive technology to this company and the other ones I'm going to mention. They're going to start generating that revenue, and it's going to happen a lot quicker than you guys think. And once it happens, it's going to be a little bit too late to invest in this company, right? So again, on the 15th of October, XRO announced it's working with TSA, which is another company focused on manufacturing electromechanical drives for electric rail systems and road transport vehicles. And they've basically entered into an agreement to develop commercial vehicles with XRO's coil drive technology again here. And they're looking to make heavy duty vehicles like buses, like vans and trucks and stuff like that, right? So once that comes out again, and once that comes to fruition and there's more commercialization in the coil drive technology, they're again going to be able to generate revenue off this. Another one is they announced an agreement with C Electric, which is again a motor company, but this one is in Australia, but it's very similar to TSA in what they're doing, which is building heavy duty trucks and delivery vehicles. And again, this is going to use the 100V coil drive technology, and this is already proven technology, as we know. So moving forward, it's really just integrating that, bringing it to the commercial market, and then start selling these systems. And again, they also have a deal with Motorino, which it was an early partner of theirs as well, and they actually produce e-bikes. And there's a test on YouTube, which I will link in the description, of them testing one of their e-bikes without XRO's technology and one of their e-bikes with XRO's technology, and it was found that overall performance was increased by 20%, and uphill performance was increased up to 50%. And this is already integrated in some of their e-bikes, not for sale yet though, but that is coming in mid 2021, right? And this might be their earliest form of revenue. It could be as early as the start of 2021, because right now they're currently in negotiations for the commercialization of their product here. And once they start selling these again, they're going to be selling their technology to Motorino, who's then going to be selling their e-bikes, right? And this is something that is fully proven and will happen. So they will be getting revenue off of this. and their EV applications and motor applications are soon to follow. So we can see with these partnership agreements where this company is headed, and it's to commercialization and to revenue, you know? I mean, Exra also announced they're working with the Calgary Innovation Center, again, to commercialize their products, right? So that they can sell them, so they can get bigger partners like the Neos and like the Teslas, you know, those will be coming. And it's partnerships like the Calgary Innovation Center that's going to bring them there, you know? And once they have revenues, institutional investors are going to start picking up this stock. Currently, less than 1% of investors in this company are institutional investors. And I do see that number growing a lot into the future. And I can see this being as early as 6 months from now, but realistically in 5 years from now, imagine where this company is going to be and what they're going to be doing and the partnerships they are going to have. All right, so now I just wanted to go over the 2020 Q3 financial report and some of the highlights that I found in this report. So right on the first page, we can see cash is over $8 million for 2020 Q3, whereas in 2019 they only had 500,000, right? And this is great to see because the more cash they have, the more they can use on R&D and the more they can develop their products for commercialization, and this is very important. So this high number for growth is exactly what we want to see in their cash and in their assets. So next here, looking at their expenses, this is also great to see. Advertising and marketing has gone down for 3 months ended and down for 9 months ended, right? And although barely down, it is good to see because they need to spend less on advertising and marketing with likely the same results or better results. We can see this company is starting to pick up in the news and pick up more investors. And again, we see investor relations go up, obviously, because there's so many more people investing in the company and because there's so much growth going on here. Same with office and rent. Of course, this number is going to go up. You know, they have way more office space they need and way more people to pay. We can see payroll and consulting fees again almost double here in both 9 months ended and 3 months ended compared to 2019. And it's really what we want to see. It just shows us the amount of growth that we're going through here. Research and development, again, for the 3 months ended, 241,000, which is close to double, and 717 for the 9 months ended. Again, almost double, not quite. And I'd actually like to see this number a little bit higher even because of the amount of cash they have. I think they can afford to put a little bit more into R&D and develop their products a little bit more for the future. Again, like I said in my last video, they are the first ones in this industry, and to stay industry leader, you need to put that money into R&D. And the rest of these numbers aren't too important. Obviously, travel went down, interest expense went up naturally. This is important down here, the loss per share. We can see for the 3 months ended in Q3 2020, it has gone up by 0.01 cents or down because it's negative, right? So that, again, because of their growth, does not really concern me too much. It's not that big of an increase, especially because this company has no revenue right now, but they're going to soon, like I mentioned. And for the 9 months ended, again, we see an increase here in Q3 2020 compared to Q3 2019. But again, the same thing. It really doesn't bother me because of the growth this company is going in right now, and because of their proven concepts, and because I know they will have revenue soon. And here we are, another key thing to mention and to look at here, net loss for the period, right? So we can see 2020, yes, they have double the loss that they had in 2019. But again, it's that growth that we're experiencing here, you know? Growth to commercialization is huge here, and that's a big part of this. Growth in R&D and just growth in the company as a whole. You know, once they start making revenue, this company is going to explode because of all the things they're doing right right now. And they're sort of establishing a base still, and that base is strong and it's good, you know. And again here, cash end of the period, we can see it's so much higher than in 2019. And this is exactly what we want to see. You know, I mentioned in my other video, those financing activities that they've done. They've raised a lot of capital through share offerings. And this is good. They don't need to take on debt. And look at all the cash they have now to work with, you know, to improve and to grow their business, right? And to start making that revenue. So this cash is going to be so key moving forward, and it's so great to see that they have that to move forward because they know what they're going to do with it. They have a solid plan, and I have a feeling that they're going to execute the plan very nicely here. All right, and I thought this was interesting to mention here, the property, furniture, and equipment. We can look at these bottom two numbers here, December 31st, 2019 compared to September 30th, 2020, right? So we can see right of use assets have gone up more than 7 times, you know. And leaseholds, obviously they had none, and now they have 100,000 here. Research and development, this is great to see here. The equipment for that has gone up substantially for Q3 2020, and this is great to see. Again, I mentioned I wanted to see some more research and development, and we can see the money is going there, and we're probably going to see an increase in research and development costs moving forward as well. So they're doing the right things here, guys. Furniture and office equipment obviously goes up as well, but those are some of the interesting. We can see the final numbers here, you know. They are growing so much. That's almost 8 or 9 times here, right? Since last year, 2019, December 31st. That's not even a year, guys. All right, guys, so now I just wanted to go into the chart really quickly with you. If you want a deeper analysis, go to my last XRO video and you'll find it there. But I drew the same trend lines here. And last time I said we're either going to see some consolidation or a blow off top here. And what do we see? We see volume came down, right? So we're gonna see some consolidation here. For how long? I don't know. I could see it lasting a few more days here, and then we're going to see another uptrend, I think, and a run up here. So watch out for that. Right now, again, is a great time to invest in this company. I mean, maybe I see it going a little bit lower. I do have a limit order for 4.15 actually. So if it does hit that, I will be picking up more shares automatically, but I don't even really see it hitting there. That's just in case it does, you know. What I really see here is more consolidation around this level, and then we come up from there. So that's what I'm expecting in the markets. And that's what I'm expecting for this stock moving forward. All right, guys, so that's gonna do it for today. I hope you guys liked the video. If you did, please like, subscribe, leave me a comment. Let me know what you guys think. I do always love getting comments. And other than that, I hope you guys have a fantastic day, and I'll see you guys tomorrow.